did you make of it in the end?
Not a bad session for the Australian share market to kick off the week and the countdown to the end of the financial year. In the end, we were near the highs of the session, and it's really been all about Greece. Reports that Greece up with some proposals, although we haven't seen a lot of that detail ahead of that emergency meeting in Brussels tonight, has been great news for risk assets. We've seen markets around the region rallying, with Japan up by 1.1%, China's closed, but the Hang Seng up by 0.4%, and the Australian share market also finishing in the black. The euro has also soared against the US currency, so we are seeing strength in the euro. If we have a look at how the euro has traded against the US dollar over the session, you can see once again we've seen it bid up, although in the past 10 minutes we have seen it come down a little bit. On the Australian share market today, though, very light volumes. We saw about $3.6 billion worth of stock being traded on the ASX, so an extremely quiet day, even though it was a positive one. We did see the industrial sector coming under pressure. That was down by 0.8%, and the material sector also lower, and some big moves as well. South 32 down by 3.6% today. No news. There are expectations that we are going to see a write-down in its manganese business. But IOOF down by 13%, SEEK down by 12.3%. Both of these out with news that was taken as bad by the market. And on the flip side, some of the mining service companies doing well. Cardno was up a massive 11% with no news released to the market. So quite a volatile day in terms of individual stock movements, but in terms of volume, it was very, very quiet.
Mike, Julia, fast approaching. I mean, some big moves both ways up and down, I imagine, for some big name stocks and sectors.
Well, while the Australian share market has underperformed, if you include the dividends, we're up about 8.5% for the year. End of financial year does tend to be a time when a lot of investors look at potential tax loss selling. So any big losses that they've made during the year, we could see some selling on those stocks. And the big losers this year have been stocks like Arium, down by 80% on the back of that lower iron ore price. MRM offshore, which is down by about 72%. We know that the mining service companies have been under pressure. And also Kathmandu down by 61%. So just watching those stocks carefully. On the flip side, end of financial year is also an important accounting period, so we could see some window dressing happening as well. Qantas, one of the massive winners on the back of those lower oil prices, up 150%. Select Harvests, which also looks at almonds. Almond prices have been going through the roof, mainly because of the drought in California. And so that stock up by 126%. So all in all, just watching some of the movements associated with the end of the financial year, which of course is next Thursday, and we are expecting to see a little bit of a ramp up in volumes going through. Today was very quiet, but ahead of the school holidays and ahead of the end of financial year, we are expecting to see stronger volumes going through the market.
What about thoughts, Julia, for the next financial year? Certainly we've been reporting a story cited in the likes of Craig James tipping 10 to 12% for the local market in total returns. Your view on what we should be expecting?
Look, I think it's going to be a lot harder for investors out there, because we will probably see increased volatility. Now, the next financial year will probably be quite a big inflection point and an adjustment period. We have been through a period of massive quantitative easing from the US, and they are looking to now start raising interest rates. And that's a big unknown on how asset prices are going to deal with that. So I think we will see increased volatility in terms of bond prices, in terms of the yield trade, and hence in terms of the equity markets as well. There are some strong themes that are happening at the moment, and these will probably continue, and that is the lower Australian dollar. This is going to have a positive impact on sectors like the healthcare space, which does make a lot of its sales offshore, as well as stocks like QBE Insurance with the longer term US interest rate expected to rise there. So there are some strong macro themes to ride, but I think it will be a little bit more difficult for investors with the higher volatility, and timing is going to be a lot more important coming into the picture as well. We've seen some massive fluctuations just in terms of, let's say, the banks, where Commonwealth Bank has fluctuated between about $96 down to $89 over the last couple of months. So I think timing is going to be an important aspect, and that's related to the volatility that we're likely to see over.
Julie, your own view on SEEK?
Well, I think the reaction in terms of the share price to the news today was an overreaction, but in terms of SEEK's growth going forward, I think there is a question mark around that. Now, the growth is still coming predominantly from its domestic business, which makes up about 45% of earnings, and then if you include SEEK Learning, that's an extra 11% of EBITDA on top of that. So we know that the local market here is saturated, it is mature, so they are looking offshore for growth. We've recently seen SEEK increasing a stake in SEEK Asia. And we've also seen it increasing its stake in its subsidiary over in Mexico, and it's been expanding into Brazil as well. And these areas, while they are potential high growth areas, with that expansion comes extra risks as well. I think SEEK has had a premium because it has performed so well over the last few years, but remember that's been on the back of growth in the domestic market. So I think the offshore game is a totally different one. I think we'll be watching it carefully because of the extra risks involved. In terms of today's announcement, look, they're probably going to sort out the TAFE New South Wales platform, and then SEEK will continue with business as usual. Unfortunately, that platform isn't under the control of SEEK, so they're going to have to work it out with TAFE New South Wales, but I can't see it being a long-term impact there. But I think the news today just has investors questioning the premium that SEEK has been trading at, given that it is trading like a growth stock, but the domestic market looking quite mature.
Dave, your own thoughts?